Very good morning to all of you, and present in the dais, Honorable MP Sri Beheraji and all other dignitaries and my beloved professional colleagues. I am very happy to attend this 62nd NCMAC. I think for the first time I am attending this, although every time invitation comes. Thank you, Mr. Chatterjee, for bringing me here. So I thought that it is a high time for the bankers to take services of this profession. So considering the time constraint, I have made a presentation, but very briefly I'll touch upon some issues where banking sector needs support of this profession. At the same time, professional colleagues also can learn many things from the banking. See, you know, one of the sector which is most dynamic in this ecosystem is banking sector. 31st March, when you go to the branch of a bank, do the transaction, the year ends. And banking accounting goes to the next day. Next year itself process of the next day, whereas our financial statement remains to be finalized. So while we finalize the balance sheet of 31st March of every year, next year starts in the system, in our operating system, next year starts. So that is how we work parallelly. We make the balance sheet, at the same time we give the services to the customer, which is starting from the very next day. That is why 1st of April bank is closed. Only for internal purpose bank is open. And you know, in banking sector nowadays, regulator has become very, very proactive. Thanks to the regulator, although we are one of the main, customer of the regulator, but you know, regulator has become very, very professional nowadays. That way, we are happy. And Reserve Bank has brought today risk-based supervision. They are not calling it as a camel type of supervision. They are not coming and ticking the things. They are coming and seeing our policies, seeing our financial statement, seeing our charges, seeing our board minutes, seeing our committee minutes, seeing our policies and the implementation of the policies. So in the bank we have got some 300 policies. They check how the policies are being implemented up to the branch level. So to that extent, bank has to ensure that the whatever policy decision is taken in the board level, in the head office level, that is being implemented in the branch. That type of testing, compliance testing and policy implementation testing is being done by the regulator. And you know, banking is the only sector which is highly regulated, because we have the power to take your money without giving any collateral. You go to a bank, give your money, and you are thinking that because it's a bank, it is highly regulated, you need not take any collateral, you can keep the money. Because of that, regulation is very strong. Where we will keep the money, which security we have to invest, further rules are there. And also for what bank employees, whenever I am getting transferred from X place to Y place, which transporter I should use, what is the rate, to that extent also regulation is there. The mean to say, banking is highly regulated. And nowadays, you must have seen newspaper daily, some issues are coming, some compliance issues are coming, governance issues are coming. RBI is also coming out heavily on that. See, there are 5 lines of defense. First is the operating system, our frontline desk, who are acting as a defense. They are implementing the policies, whatever has been framed. So anybody wants to go to a branch, if they say I want 100 crores loans, branch cannot give it because policy is preventing them, system is preventing them. Second is risk management department, where we frame the policies, where we say that which sector I should finance, which sector I should not, what delegation of power I should give every individual, what board will have, what should be reported to board. So that policies are framed by risk management system, so that is called the second line of defense. And if I see any business need, risk management department again changes the policy, modifies the policy based on the requirement. Third line of defense comes the internal audit system. We have got a very big internal audit team. They check whether the policies and procedures have been implemented in the letter and spirit or not. And they come out with their report. Wherever deviation comes, we plug those gaps in terms of policy, and that is how the cycle works. So if we have a policy, internal audit department is thinking and finding out gaps, they are thinking these are the problems, so that policy has to be changed or some action has to be taken. So either way, we are revising this and modifying the policy. This is the third line of defense. Fourth line of defense is very important, that is external audit. Here all of your role comes. External audit is not connected to the bank, they are from outside and they are providing services to the bank. It is inclusive of cost accountants, chart accountants and all other professionals who are giving services. Because based on that certification only, bank takes some call. And this fourth line of defense is very critical from the regulator's point of view. And fifth line of defense is regulatory inspection. So these are the 5 lines of defense for a banking industry. So I'll talk about fourth line of defense because here the role of cost accountants come. You know, we are in the bank, we are engaging cost accountants for the purpose of stock audit, TV study. Then we have got some valuation. We have got as a ASM, Agency for Specialized Monitoring. Then there are some credit audit which is taking place. Of course, DP also, statement also you are giving. From the bank side, I would like to tell all of you, today it is not the old pattern. If stock audit is given within the timeline, then it is fine. Otherwise, beyond the point, it will become NPA. That is the quantitative part, whether stock audit has been received or not. Because based on stock audit, DP is ascertained. So if it is not given within time, it will become NPA system driven. But quality of stock audit report, we are not being able to put because there are so many criteria. We are seeing stock audit report is coming. Because see, there are 2-3 things which has to compulsorily come in the stock audit. And we are seeing increasingly that gap is there. First of all, whether this stock is current or not, whether it is obsolete or current stock. Number 2, whether this is expired and what is the quality, overall quality has to be achieved. Then we have to see whether the insurance is there. And of course, the quantity of the stock has to be seen. So these are the 3 major things which stock auditor has to mention. We are seeing these 3 things are also sometimes are not given in its requested form. And you know, based on stock audit, DP is calculated. And you all know what is the use of drawing power. Without drawing power, we cannot release the loan. And in this area of competition, every borrower, I will not say all, some of the borrowers are trying to get maximum finance. Because you know, today banking sector and the economy is having twin strength. One is the strength of the balance sheet of the bank and also the strength of the good borrowers. But in risk management, we always believe that risk build-up takes place in good times. When everybody thinks, okay, this much of projection they can achieve, there will not be any problem. Problems are behind. But actually it is not so. So this time, unless we check these controls, unless we implement these risk mitigators, then we are building the risk and it will fall. We are seeing many cases, so small company, 50 crores turnover, they have taken 15 crores loan from us. Again, another takeover is taking place from our bank to another bank where they are giving enhancement of another 5 to 7 crores. So for a 50 crores turnover, if they are taking 22 crores, if the business cycle assumed to be 3 months, repayment cycle 3 months to 4 months, it is over financing. But some stock auditor is giving the report, DP is coming. Some of the excess finance they are adjusting. So what I mean to say, this particular aspect, please, wherever you are there, please see this, that is not done. Because what will happen, You know, nowadays, one loan is becoming NPA after 5 years, 10 years, when forensic auditor is coming, they are seeing this is how diversion is taking place. And they are blaming the bankers that you have overfinanced. Now, today I am, in good faith, I am saying, okay, he is telling, today his customers have got 50 crores turnover. He has got a big order, so he will be including the turnover 50%, 75 crores will be his turnover. That much finance can be given. But actually it is not so. Whenever I am seeing his projected turnover is, say, 75 crores, actually he is doing only 30 crores. So that means overfinance is totally recorded. And today, this has caused huge kind of, problem for the bankers, because you know, today when RBI takes action, they don't see promoters, they don't see rating, they don't see who are the person behind it. Bob World, बैंक ऑफ बड़ौदा का ऐप था, उसमें ऑनबोर्डिंग स्टॉप कर दीजिए, डोंट ऑनबोर्ड एनी कस्टमर. कोटक महिंद्रा बैंक 911 app, they said no onboarding customer through that app. HDFC Bank, no onboarding of customer. IIFL, no gold loan business should, further disbursement of gold loan should be there. JM Financials, they cannot do some additional business. So what I mean to say, whatever may be the rating, whoever may be the person behind, RBI is taking action by setting aside all these backgrounds. So governance and compliance comes. So today RBI has developed a concept called assurance function. Assurance function is a combination of inspection, risk management and compliance. This is one of the strong pillars as far as RBI is concerned. Why I am telling this to all of you? Because you know, these capital adequacy norms, liquidity, LCR norms, NSFR norms, these are all standard mitigators. But this assurance function, unless it is being implemented in the later on spirit, governance failure will be there. You have seen what has happened to IndusInd Bank recently. So what I mean to say, all the professional, I request all the professional colleagues here, present here, please see that wherever you are giving any certification, please don't go by the version of the borrower alone. Please use your professional judgment, and you see the ecosystem becomes stronger, institution becomes stronger, because when you are strengthening the institution, we will be valuing the institution. There are so many valuers, 25% of the valuers we are depaneling every year, and we are coming out with a portal also. So what I mean to say, let us not bear that kind of reputation. Let us bring glory to the reputation. And I personally feel in the banking sector, role of cost and management accountants are very, very high, because customer profitability is yet to come in the full way. It is yet to come. RADOC, what we have implemented in the banking system, this also not come through a strict regulatory guidance. It is only optional. So all of us can help the regulator also to develop this ecosystem and also ensure that better governance. Thank you all for giving me this opportunity.